Live from Bloomberg's World Headquarters in New York, I'm Sonali Basak.
And from our San Francisco bureau, I'm Tim Stenevec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
We have a packed show for you today. We have some of the most influential names in crypto because leaders are meeting at the Digital Asset Summit. And in just a moment, ARK's Cathie Wood will be joining us. Plus, fresh off his trip to the White House, Chainlink's Sergey Nazarov will be with us here on set in New York City. And as digital assets gain steam, Macellari, head of digital assets at T.Rowe Price, discusses her firm's push into the industry. That's all ahead, but first let's get a snapshot on what's going on in the market today because Bitcoin is down as risk sentiment continues to decline across asset classes. You have physical gold on the rise, but digital gold not so much. You have it down 2.8% on the day. Of course, days of volatility here, but you are still above that $80,000 level. I want to flip up the board here and see what that means for those ETFs that were so beloved last year. You can see that streak of inflows and then a 5-day streak of net outflows. And that you see that asset class taking a hit here as broader sentiment declines. It's their longest losing streak since you've seen them list earlier in January. Now, Tim, this has been quite the dynamic here because this has been one thesis that set the Bitcoin market flying, of course, last year. President Trump and his policies were supposed to be another catalyst here for the Bitcoin industry. We have not seen that take into effect yet. It's what we're going to be talking about through the course of this show.
All right, well, let's take a look right now at how crypto prices are doing. I want to bring in a very special guest right now. I do want to welcome our Bloomberg TV and radio audiences who are joining us now. Is ARK Invest CEO and CIO, Cathie Wood. Cathie, good to have you on the program this afternoon. I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
One question I have to the point you're making here on where the risk appetite stands around Bitcoin versus other asset classes, there has been a serious dip in markets, Cathie. If you had to choose where you would buy the dip the most, would it be in Bitcoin, Tesla, or NVIDIA?
Oh, my goodness. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
So what does this mean in terms of where you see things going? Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down. And we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening.
What do you see as the rate path for this year? The Federal Reserve kicking off its two-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
Hey, Cathie, you and I have spoken quite a bit over the last few months. You were optimistic about the Trump administration, specifically with regard to disruptive technology and your thesis, but also with cryptocurrency. You just spoke about the easing regulatory environment around crypto. I'm curious, though, what you think about President Trump's relationship with crypto. The Wall Street Journal reported that the Trump family has held deal talks with Binance following that guilty exchange plea. And then also you have the president getting into Memecoins. You have World Liberty Financial. Are you at all concerned that the Trump family is too close to crypto?
Well, I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. Because, and I think that, the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem.
Cathie, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, Cathie?
It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, you know that that's just a step too far, and that most of them are not going to be worth very much.
Cathie, I want to switch gears here a little bit and talk about something that I know you've been focusing on a lot, tokenization. Now, one question I have about this is, do you think the investment community, particularly the venture community, is underestimating how catastrophic this could be to their business model? If you have companies that can raise money through tokens rather than through traditional venture capital and go public this way or list this way rather than through the traditional listing process, is that a sea change coming for the way that this has typically been done?
I actually think it's very complicated, but in terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many, many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well.
A little earlier, you said that when you look at these dips, you've been trying to take advantage of them, particularly in part through Coinbase and Robinhood. I have a question about Robinhood in particular. Do you think it looks more and more like Coinbase in the future? And to the extent that you're buying more of it, is it on the thesis of expanded stock trading among retail investors, for election betting, or expanded crypto trading? What of those three things is your favorite thesis?
Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners.
I do want to ask you a big picture question about crypto, because I think for a lot of people, they look at these tokens as stores of value, as bets that they'll go up in the future and they'll be worth more and their portfolio will grow as a result. When do you see use cases for crypto, maybe specifically Bitcoin, actually affecting us in the real world? You spoke about tokenization just now, but when will we see crypto being used as something else apart from just a store of value?
Well, I think what is happening with the stablecoin movement, which, again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar. as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stablecoins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth.
Cathie, you have the great challenge of investing in innovative solutions at a time where the market is nervous and discounting the idea of putting more money to work in innovation at the moment. And to the extent that you could choose one single biggest conviction bet that you would make right now, what is it and why?
Well, we have been known for our Tesla call and our Bitcoin call, and those still stand as two of our biggest calls, for sure. I would add, in the AI age, platform as a service companies like Palantir, which are really enabling large enterprises to move into this AI age and enjoy the efficiencies, the cost effectiveness, and to create new products and services. Those, I think, are going to be very big as well.
Absolutely fascinating. ARK Invest, Cathie Wood, we thank you so much for joining us today, looking ahead of the curve a little bit and some thoughts on how to get into the ability to buy this dip. Thank you so much for your time.
When we talk to folks in the administration, everyone's really motivated to make the U.S. the leader in this industry.
Now, our next guest was at the White House Crypto Summit at the beginning of the month. We talked to him the day before. He's back with us now. We're going to see if he liked what he heard. Chainlink Co-Founder Sergey Nazarov at the desk with us now. What's interesting to me is that you have folks from the crypto community being brought down to Washington. This happened even around the inauguration. So much excitement that you just have not seen materialize in the price of Bitcoin. Why? Why is that?
I think a lot of things were probably priced in during the late stages and the final election results. And so I think now you're starting to see some amount of clarity come forward. And there isn't necessarily clarity on everything that people want yet. I think as you get more and more clarity, and especially as that clarity allows more regulated institutions to enter the industry, then the numbers that those institutions, traditional financial institutions, represent will make it very clear that this is a much larger market than it is right now.
Sergey, take us into that summit. We took comments from the president and from David Sachs live, so we all know what they said. We actually heard from you, I believe, there making comments too. What happened, though, when the press was ushered out, when the cameras left?
I think there was a lot of positivity from the entire industry side of the summit. So they were very grateful for all the support from the Treasury Secretary, Commerce Secretary, the President, David Sachs, Bo Hines, all of these great folks, as well as the Congressman Tom Emmer and Brian Stahl, who was there. I think at the end of the day, it's commonly now more and more understood that our industry was unfairly persecuted in a way that depressed it and made it not everything it could be here in the United States. I think the general model of this administration is that if something has a global impact or impact on the U.S. economy, then they want to be in a leadership position. And so that means that from their point of view, crypto is a big driving force for the global economy and for the U.S. economy. That's what I think became even more clear after the cameras turned off. So I think this is a very high level of commitment, signified by the fact that you have both the Treasury Secretary there, the Secretary of Commerce, the President, and they basically explained their commitment to make sure that the industry is no longer unfairly depressed or persecuted and allowed to develop properly and allowed to make the U.S. a leader in the Web3 economy and the Web3 financial system, which I think the U.S. has a very good chance of doing if it does certain things correctly.
What does it need to do correctly? We only have a couple of minutes, so just 30 seconds. What does the U.S. need to do correctly now? How does it need to make good on what you heard at that summit?
The U.S. financial system has a very big domestic market, and it's known for having very reliable assets and transactions, lower levels of fraud due to a good legal system, which basically results in being viewed as a reliable financial system. So I think what it should do is it should continue that tradition of being the most reliable financial system by issuing the best assets possible, the most reliable version of stablecoins, tokenized funds, commodity coins, tokenized real estate in the U.S. system. Once you issue the most reliable assets in the U.S. system, I think the automation of compliance to lower the cost of transactions into the U.S. financial system from outside international purchasers is the next step. So if you have the fundamentally best asset and you've lowered the cost of compliance and the cost of resale for that asset because the cost of compliance has dropped to much lower, if you've done both of those things, then the U.S. can actually even gain market share in the new global financial system that's now going to be powered by Web3.
Sergey, we have to leave it there. We thank you so much for your time. Of course, that is Sergey Nazarov of Chainlink, the co-founder there, who is joining us from the Digital Assets Summit. And we're going to hear much more from the summit. We're going to bring in T.Rowe Price's head of digital assets, Blue Macellari. She will discuss how Wall Street is planning for mainstream blockchain technology, talking about Web 3.0. She's going to join us next from that summit in New York. Looking forward to seeing exactly where this industry is going to go. This is Bloomberg. This is Bloomberg Crypto. I want to give you a check on the stock market right now because, of course, it's been a brutal day in the market. The S&P 500 is still almost down about 1%. It is off of session lows, but nearly 1% lower nonetheless. The NASDAQ 100 down about 1.4%, with every component of the Magnificent Seven down on the day. Bitcoin, for its part, is down about 2.2%, but holding not only well above the $80,000 level, still above now the $82,000 level. We have had some dip buyers in these markets, but not by much, as we see that negative sentiment still streak across of these markets. Now let's get back into the world of crypto. We're going to discuss Wall Street's entry into digital assets. We're going to bring in T.Rowe Price's head of digital asset strategy, Blue Macellari, and she joins us now from the Digital Asset Summit hosted by Blockworks here in New York City. And Blue, you look at traditional Wall Street start to make the move over. First, it was very, very slow. Then it came fast, and then it's kind of stalled just a little bit as people wait for more clarity from Washington. Where do you stand? What do you think that the next phase of crypto is in the way that Wall Street embraces it?
Yeah, so thank you for having me. I think that one of the things that we've discussed in previous cycles is that the institutions are coming. And I think the element that's been missing up until now is regulatory clarity, and we're on the cusp of having that. I think that institutions need to see that clarity and that regulatory framework fleshed out. But I think we're on our way to having that.
Blue, if you could wave a magic wand or speak to lawmakers or design the regulations around this, the framework around this, what would you do? What exactly do you want to see?
Yeah, I think an important piece is the recognition of the technology and the way that the technology works, right? So there are certain things that a decentralized protocol aren't capable of doing in the same way that publicly traded equity can do. So I think it's about understanding the technology and applying that understanding to get to appropriate rulemaking. And I think that we see really strong signs of that happening. I think we've seen that Hester Peirce put out 48 questions for public information, and they're sophisticated, complex questions that really get to the heart of both the technology and how to make rules for that technology.
So if that indeed happens in the near future, you're certainly optimistic about it. Other people we speak to are optimistic about it happening during this administration. What then happens at institutional investors? What does the wave look like of adoption?
So I think there's two elements to it. I think that we can't underestimate how important certainty is for very large institutional participants. 98% sure is not enough for people like us. So the true clarity matters. And I think there's two elements. I think that we see asset class and asset class future for crypto assets. And I also think we see institutions adopting the technology and using it within their own sort of businesses. And I think that both of those are going to be really important developments.
Blue, how much interest is there outside of Bitcoin? Bitcoin, of course, has been the kingmaker here, and it's something that you have more and more households in the United States at least able to ask the questions, if not wrap their head around what Bitcoin is and how it works and what the potentials and even questions are. Outside of that, how confusing is it?
So I think that crypto and blockchain is probably one of the most complex sectors out there. It's one of the reasons that it interests us at T.Rowe so much is we have a long history of research-driven investment and thought in complex sectors. I think that one of the things that the entire industry needs to do is to make the technology and the understanding of the use cases more accessible. And I think we're beginning to see that this cycle. I think that we are starting to have real applications that people can use and not know that they're on the blockchain, right? And that's what you want. Ultimately, you want the blockchain enablement, the technology to be on the back end, to be seamless.
How do you think that this is going to change the way traditional financial markets work? If you think about traditional investors, there are certain ways they've gotten access to crypto, and that is through ETFs now, although that's a relatively new establishment for spot ETFs. You've gotten it through investing in the likes of Coinbase or MicroStrategy. Is that going to change meaningfully in terms of more direct assets to these crypto assets themselves?
Yeah, I think that we have sort of two trends happening at the same time. So we have crypto assets becoming available to retail investors through these new financial products, which are wrappers like ETPs. And at the same time, we have traditional financial assets becoming available to crypto native users through tokenization. So we have this sort of two-way pollination right now, which I think is really interesting. I think ultimately, longer term, at least in my mind, it's not a question of if, Wall Street will tokenize. It's a question of when. I think it may be slower than many people would like, but I think that that's definitely the direction that we're going to be headed.
Blue, you have a background in emerging markets. We just heard from Cathie Wood about the promise of crypto when it comes to emerging markets. Beyond tokenization here in the US, in Europe, in other developed markets, what is the promise of crypto?
So I think when we talk about Web3, it's a difficult concept to access. People talk about read, write, own. Well, what does that mean? I think that it allows users to become operators and owners, right? So it means peer-to-peer internet. So for example, take Helium, which is sort of the Uber of phone plans and Internet of Things and mobile hotspots, right? And so users can both use the network, but they can also participate in validation of coverage, mapping the network, and net participate in the economics of the network as a result. And I think it's a difficult concept to understand on paper, but I think that once people experience it, it becomes very hard to turn back to older economic models.
Blue, always good to check in with you. Really do appreciate your time this afternoon. Blue Macellari over at T.Rowe Price. Coming up on Bloomberg Crypto, a Solana ETF is in the cards. And Leah Wald from Sol Strategies is ready. We're going to discuss with her next. This is Bloomberg.
We're still in a bull market, and we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
That was Cathie Wood earlier this hour. We're going to broaden the discussion out. We're going to bring in Leah Wald, formerly of Valkyrie and now at Sol Strategies, which offers staking under the Solana ecosystem. And Solana has been a very interesting place to be looking in the world of crypto. But of course, like many of the assets in crypto, sold off with that risk appetite. Let's just take a step back, look at the broader picture here. We have seen Bitcoin well off its highs. We have this excitement coming from the crypto community about regulation or changes in regulation, even some deregulation in the industry. Why is the sentiment so sour, and how do people navigate through that?
Yeah, that's a great question, and thank you for having me. You know, it's very interesting, but obviously we've seen a complete correlation to the sell-off in traditional markets. And I think that you've definitely seen this progression since 2020 of that coupling. You've seen altcoins have reacted more as small cap tech stocks, whereas I think Bitcoin, which has established this store of value asset classification, especially with the advent of the ETFs and BlackRock and others generally allocating in such large amounts, you've seen less volatility. So at this point, I think that with the market sentiment being concerned about tariffs and what the general economy is looking towards, and we've seen this risk-off appetite, I think that that's translated directly into what we've seen in the crypto markets. So if we believe in what Cathie Wood just said, and that's a smart woman for sure, there's still that long-term trend that's bullish. So we're all excited still.
Let's talk a little bit about Solana. It's not a crypto that gets a ton of attention, but it's down about 35% so far this year. In terms of the underlying technology, Leah, how would you describe institutional adoption of that technology?
Yeah, it's a great question, and actually exciting since Sol Futures were actually started trading yesterday on the CME. And they actually had a very interesting and good debut, I would say. In the end of the day, we need to see each altcoin launch as different. Each of these alternative currencies are different from one another. I think what's been interesting over this time period is seeing Bitcoin become what's seen as a store of value asset, played as such, invested in that asset as such, with a longer time horizon when the volatility has been muted. Whereas these alternative currencies, investors are still trying to make that differentiation between Bitcoin or Ethereum, Solana, XRP, et cetera. So I think that Solana has proved itself that it is a very interesting alternative currency and blockchain with very much immense staying power due to its ability to handle transactions per second in a sub-second environment, interoperability, and a lot of other advances. So I think that institutions are taking it very seriously. Again, we've seen Sol ETF applications already in. You've seen Sol Futures ETFs as well.
Yeah, to that end, that's exactly where I was going to go next, the ETF. I know that you've kind of hitched your wagon to Solana here. It's Sol Strategies, isn't it? But if you had to make an educated guess on the types of ETFs that you might see next approved by the Securities and Exchange Commission, do you think it's Solana or something else? And depending on who it is first, what kind of new interest do you think it might bring to the ETF community that may not even really know about these assets?
It's a great question. And it's interesting because if we look towards historicity, you know, when we launched our Bitcoin ETFs and especially Bitcoin Futures ETF at Valkyrie in October 2021, it was very much because Chairman Gensler had specifically said 1940 Act vehicle with CME traded Bitcoin Futures, which had already established that it had price discovery in a positive market. And was a robust market enough. Now we have a completely different administration that is very pro-crypto, and I think it's very much to be determined on what type of structure they want to see that ETF in. But now you have Sol Futures that have already been trading, and I think that that's already proving itself to be a robust market, and that's just day one trading or day two today. So in regards to when will those Sol ETFs come out, I'm obviously not sure. I can't speak on behalf of the regulators, but of course we have a much more pro-regulatory environment. So I think that we will see that as the next evolution. But the second part of your questions is very interesting to me. The question, I think, comes down to how do investors differentiate between Bitcoin, Ethereum, and the other alternative currencies, and when and how will they see that Solana is, let's say, potentially a superior blockchain whereby a more interesting and stable speculative investment. I think that takes time, that takes education, that also takes regulatory information and guidance, and we're still getting there. But that's not a bad thing. That provides that opportunity for us, boots on the ground, talking to registered investment advisors and other allocators to get there for that educational piece.
Leah, on the regulatory side, have you spoken with crypto and AI czar David Sachs?
Personally, I have not, but we're all, I think, very excited that he's there in Washington, D.C. He had a large allocation to Solana that, of course, he exited prior to joining in D.C., but he's doing great things. He's very fascinating, and he's fascinated in, obviously, blockchain assets, and has a great basis of understanding with Solana specifically.
Speaking of Solana specifically, and the point we were talking about earlier, the potential for it, if Solana succeeds, who loses?
What a question. I think that no one loses as long as education is promoted and garnered in a specific, very open and honest manner. As long as investors can ensure that they understand the difference between, again, XRP or some of the Memecoin applications that are in as well for the ETFs, there's many that are already in. So I don't think any investors can lose if they're able to differentiate what their investment actually is and they understand how to allocate to it accordingly, whether it's a shorter or a longer term, time horizon.
Yeah, it's important to remember on one hand, these crypto assets tend to move together, but they are indeed very different and in some ways in competition. That is Sol Strategy CEO Leah Wald. Of course, a very deep knowledge here of that ETF process that investors are watching very closely. Now, coming up, more on the U.S. regulatory outlook. We're going to bring in Kraken Senior Advisor Marco Santori. Stick with us for that conversation next. This is Bloomberg.
We have been having different meetings with lawmakers and the administration. It's very important that our voice is properly heard because, as I said, we represent the most important use case for the US dollar hegemony around the world. We build kiosks in Africa that facilitate the usage of USDT and so US dollars.
That was the CEO of Tether on Bloomberg just last week. Now, the U.S. Senate Banking Committee has moved forward with legislation to govern stablecoins. And Kraken Senior Advisor Marco Santori joins us from the Digital Assets Summit hosted by Blockworks here in New York City. Marco, this idea of clarity around stablecoins in particular, I've been thinking a lot about the different use cases that they have come to surface. Even recently, you think about Robinhood using stablecoins to facilitate 24/7 trading. You think about payments uses. What do you think is going to be the largest to take off in regard to stablecoins if we get much more clarity?
Yeah, it's a great question. I think you have to think about stablecoins. When you zoom out and look at the whole industry, you have to think about stablecoins as one of those critical bits of technology that will allow other things to be built upon it. So you can think of Uber with GPS, right? Uber never could have existed without GPS. In fact, it took a whole bunch of other technologies to get to where they are today, or just a few years ago when Uber took off, to have a functioning ride-sharing system, right? So when we have ubiquitous US dollars, you can think of those US dollars more like Legos than pieces of paper of the dollar bills in your wallet. You can build things with them. You can build new things on top of them. I think the payments use cases are clear, but there's also the store of value use cases, right? There are people who don't have access to dollars who are going to use them, who are going to use stablecoins simply to store their value in dollars when they wouldn't otherwise have access to them, whether it's because of irresponsible regulatory regimes and governments or a lack of physical safety where they are in the world. I think the simplest use cases are going to be the most ubiquitous. But if you want to get a little bit more exotic, I think decentralized finance is going to explode once we see more stabilized use of stablecoins by institutional players.
If this is indeed a GPS moment, Marco, then what is built? What is the Uber of the stablecoin?
I think we're going to see more of what we see today in traditional finance happening faster, happening more efficiently, happening in a way that's trackable and traceable, in a way that we actually need fewer regulations rather than more regulations, right? We have a CFPB, right, the Consumer Financial Protection Bureau in the United States, largely because of the inefficiencies and the moral hazards of traditional financial systems, like banks and money transmitters. When we can move much of that functionality out of the back office and on chain, you're not only going to see clarity, right, for innovators to do more with stablecoins and do more with business, but you're also going to see a less need for burdensome regulation.
You know, Marco, one thing that I want to point to is that you were an author of the SAFT project white paper, SAFT. It was a self-regulatory effort. It's been described this way to curb initial coin offerings. And I'm wondering, when you look out there and see all the tokens that are coming to surface, we just talked to Cathie Wood, had given a lot of caution on some of the stuff that's being put out there right now, particularly that's going in the hands of retail. Do you think that there needs to be more of an effort from exchanges, from regulators? I mean, who's the person that sits there and says, stop at some point, because certain people will lose money off of some of what's being put out there? Many people will.
If nobody loses money, nobody makes money, right? We have to be clear about that. That is one of the tenets of capitalism, right? You have to be, if you're going to be free to make money, you also have to be free to lose money. That's what capitalism means in America. But it doesn't mean we shouldn't have any guide rails at all. In fact, you said I was one of the authors of the SAFT project framework. It did become a global standard for issuing tokens. But the market has evolved, right? Those really were the early days, the Wild West of ICOs. And if you do go back and you read that white paper, the main point of the white paper was this free-for-all that exists today of initial coin offerings, it is not durable. It's actually probably illegal, is what we said in the white paper. But more than that, it's just not efficient. There are better ways to sell crypto.
Marco, apologies for jumping in. We only have a minute left. What can you tell us about Kraken's plans to go public? Because our own Bloomberg News colleagues reported, citing people familiar, that the firm is aiming for the first quarter of next year.
Now, I wish I could talk more about that, but I will tell you that Kraken is a fantastic place to work. It's a fantastic place to trade your crypto and to use crypto for things other than just buying and selling. I'm a customer. I'm a shareholder. I highly recommend it, but I'll leave all of the IPO speculation to the professionals.
Marco, we thank you so much for joining us today. That is, of course, Kraken advisor Marco Santori. We appreciate your time today, of course, from the Digital Asset Summit in New York from Blockworks. And tomorrow, we are going to be joined by Ripple CEO Brad Garlinghouse, who's joining Bloomberg Markets at 12 p.m. Eastern. A lot of questions about XRP, a lot of questions about stablecoins, and questions about a potential XRP ETF. But that does it for a special edition of Bloomberg Crypto today. We're going to be back next week. Tim, we'll have you back in New York soon, I hope. Enjoy San Francisco. Looking forward to the coverage. And watch us for markets throughout the day. Of course, it's a choppy trade out there. We will bring you all you need to know. This is Bloomberg.